In this video, guys, we're going to look at the 3 attributes of a great trade from my perspective and my opinion. Stick around. Hey guys, warm welcome to you. Alright, so I did a video a while back where I talked about the pillars of a great trade, and something I kind of do and when I'm reviewing my trade, I think, what are these 3 things? Or what are actually I came up with 3, but what are the main things? Just the main things that make a trade a great trade and give it the most possible chance of success. And these are 3 things that I think you need to have in each trade, at least these 3, before you even consider to take the trade. All right, so 3 attributes of a great trade. Number 1, market conditions. You can't have a good trade unless you have the right market conditions for the trade. And you're going, Mark, you're so boring, you talk about this all the time, the conditions. I promise you guys, I promise you, if you're trying to trend trade in a range bound market, you're going to get smashed. And it's a simple thing and it's an easy fix. And it's an easy fix, and you fix it, it's done. It's like, okay, is the market trending? Well, let me trade a trending strategy. It's an uptrend. Let me try to find a good place to buy. Yes, we can confuse this and complicate it and say it's going to end at some point. It is, but picking the end of a trend is hard. Let's just go with the easy part of it, which is trading with the trend. So the conditions. If you're trading and you're looking for extended moves in markets, you need a market that has those big extensions, those big ranges. If you're trading and you're trading mean reversion, you need something that's just stagnant and stopping and kind of throttling back on Bollinger Bands or Keltner channels or whatever tool you're using. The conditions are absolutely crucial to a successful trade, and it has to be the right trade for the right conditions. Number 2, a good risk-reward ratio. Why do I say this? Because it just allows you to be, for want of a better word, pretty bad with your trades. You can be a pretty bad trader and get most of them wrong, but if your risk-reward ratio is good, you're going to come out on top. And very many of the big traders, in fact, I remember Paul Tudor Jones saying this, paraphrasing, he always looks, well, that's the same anymore, but I expect it is, for trades that give him, a kind of many times payout to what he's risking. For a dollar he's risking, he wants to be making $6, $7, $8, $9, $10, $20, $30. That's what he's looking for, the asymmetric risk reward ratio, so that he can be wrong, so that he can take these trades and so he can make money. And so this is the same for many traders, guys. And it's easy to fall into the trap of, but there's not many good trades with a risk reward ratio, high risk reward ratio. Be brutal. Say to yourself, has this got an opportunity to go 5R? Yeah, it does. Okay, well, that's a good chance. Okay, where's the first stop? The first stop might be 2R, but has it got opportunities to go 5R? Yeah, well, there you go. Take that trade. If you haven't got a good risk-reward ratio, if you're just kind of looking for those singles, you've got to have a high probability of success. And then you're kind of really got to be fine-tuning your entry. It makes a hell of a lot of difference whether you're late to the trade, because that's going to skew the stop distance. And there's lots of other stuff that get affected. So good risk-reward ratio is so crucial. If you can have that, you have the market conditions, you're 2/3 of the way there. What's the final thing? The final thing is confidence. Now, why do I say confidence? This is not a metric you can measure. It's not like market conditions. No, but if you take a trade and you don't have confidence in the strategy, what you will do is you will cut the trade early. You know it, I know it, this happens. You take the trade with the best will in the world and you decide, I'm going to hold it until this 5R move, got a good risk reward ratio, you're in trending market. If you don't think that strategy is effective, you don't think that trade is a good trade, you're going to cut it as soon as you get some profit, or as soon as it goes your way and comes back a little bit, it starts to stagnate. The fear is going to come in, I don't want to lose the money, I'm not confident it's going to hit it, and you close the trade. You're never going to allow it to kind of leverage on the conditions and to kind of get to the maturity of the trade. So you have to have confidence in the trade and be a case of, right, it's going to do this, I'm expecting it to do this, but if it doesn't, that's what my stop loss is for. And having that ability to stick with the trade and stick with the idea that you're trading will mean that you can get these high risk reward trades, because there's no good saying it's a 10-hour trade if you're always cutting it, every time you take your risk off the table, it's a 1R or 2R. And so yes, there's some dials to be adjusted here and there's some things to change, and it's not a one size fits all, but these 3 things generally, if we're keeping it simple, will help guide you and will help keep you on the right track. The conditions checklist, a good risk reward ratio, check. Confidence, check. Because if you think about it, if you have good conditions and good risk reward ratio, fine, but you'll cut your trade early because you don't believe in the trade. If you have a good risk-reward ratio, great confidence in the trade, but you don't have good market conditions, what's going to happen? You're just not going to be able to get the extensions you're trading a trend environment in a range-bound condition. You're not going to get it. It's not going to work for you. And if you have the right conditions and confidence, but a bad risk-reward ratio, you just always have to be very, very, very accurate. You have to be right, 75, 80% of the time to make money because you're in one-to-one, you've got a low risk-reward ratio. When you start putting them all together and you get right in the middle of that sweet spot, good risk-reward ratio, good conditions, and the confidence in your ability and the strategy, that's when the real sweet spot is. That's when you really get the possibility of a great trade. Listen, don't know whether that trade is going to be profitable, but you do that enough times and you get those three lined up enough times in a row and take those number of trades, I think you'll find that you get better results from your trade. Bye-bye.